Good morning, students. We welcome to this session. As a continuous endeavor by Board of Studies to connect with you, we are organizing this session.
Recording in progress.
Interact with the students to guide you about the strategy for preparing for the examination. As you know, that your examinations were earlier scheduled in May 22, but now they have been postponed, and now you have 1 month more, additional 1 month, which you can take the benefit by doing more questions and getting more clarity of the concepts by reading the contents thoroughly from the study material. CA is a very noble profession, and accounting is very core paper, is very significant paper under the curriculum of Chartered Accountancy profession. As you are moving towards the journey of CA profession, I will advise you to make sincere efforts by doing the contents of the study material thoroughly, by solving as many questions as you can, and by utilizing the BOS knowledge inputs which are being provided by us too. Study material, RPPs, MPPs, previous suggested answers. These all inputs will give you complete confidence. And my dear friends, sincere efforts, dedication, continuous efforts, time planning, time management, they are very crucial for attaining success in this profession. Foundation is a very basic step for this, and your journey of hard work, your journey, difficult journey will now start, and you have to gear up for this. So, accounting is very important, and even after becoming chartered accountant, in day-to-day life, you will have to follow the concepts of accounting standards in your real-life situations, in practical situations. So, you have to understand the accounting not from the core of your heart. And I will guide you. We will guide you through today's session, the strategy for preparing the examination, as well as we will also cover some important topics. The crucial points of the important topics will also be covered today, which will help you in revising the course curriculum. So now I am CA Seema Gupta, Faculty Board of Studies, and
I am CA Priyamvada. I'm also Faculty Board of Studies.
We are here to guide you. And Priyamvada, can you please tell when the exams are scheduled this time?
So now the exam would be starting from 24th of June for CA Foundation course. Now you have almost around 2 months to prepare for your exam. What should be your strategy to prepare for exams? Especially for the foundation course, paper 1 accountancy. Since Seema ma'am has already told you this is a core paper, at every level you have to do this paper, you have to solve each and every question. Now your focus should be on practicing. You have 2 months. Dedicatedly, you please devote your time on practice, as much practice as you can. Devote at least 2 hours a day on practicing your practical chapters, your practical subject, that is accountancy. You have to do your study material 3 times at least. First, do your study material, do it from your hands so that you will be able to solve it question, you will be able to understand what are the basic concepts, where you are stuck. You solve each and every question, even the simpler question also should be done by you.
So it means that the students are now having 1 additional month. Earlier their exams were in May, and now their exams are in June.
Absolutely.
So at least we can say that 1 additional month they are getting.
Yes.
So how can we utilize this additional month? I think by attempting more and more questions.
Absolutely. So say when you practice your question, you should solve each and every question. Second time, mark the questions which are very important, where you are stuck, then solve those questions again. And then third time, try to solve those questions again. Now you will have a hands-on on those questions.
So important adjustments, important points, important tricky points, they can also write at one place by making notes, and so that they can take the benefit of these notes at the later revisions.
Yes.
So now I think you all have one additional month, and you can gain benefit out of it. Yesterday only this notification came, and through which we have come to know that their exams have been postponed. And many of the students are in 12th now, so you can focus earlier on 12th examination, then you can concentrate towards the foundation. So, any other thing you would like to say?
Ma'am, I would like to ask, what would be the marks weightage for each and every section? How can I prepare for this?
Okay, so let's start the PPT, and through this we can guide the students. So, as regards knowledge inputs, we have already guided you that September 21 edition of the study material is relevant, and study material is very important. Don't go here and there, and don't take any other material from the coaching centers, because I would like you to practice the questions given in the study material only. The concepts will be shuffled if you go here and there, and you will not be able to gain confidence while attempting the questions in the examinations. So the base material is very important. So you have to keep the base as a study material itself. We can solve more and more questions through our RPTs, mock test papers, and suggested answers to previous question papers. So,
Ma'am, but there are many other books available in the market.
You can refer those books for additional questions, but for conceptual understanding, as you know, accounting is a practical subject. So we cannot say that just by solving the questions we will gain the confidence, or just by solving the questions we will know the concept, we will understand the concept. You have to understand the theory of the chapter also. You just can't jump to the questions itself. So you can refer the textbook which are available in the market for more and more questions. For additional question bank, you can refer those books, but not for attaining the conceptual clarity. Conceptual clarity you have to understand from the study material itself. And the base material you have to keep as a study material. And like we have prepared one additional feature for the benefit of the students, quick references. So in those quick references, we have summarize the entire contents of the chapter in flowcharts, in tabular presentations, in diagrammatic formats for the benefit of students, which you can just give a quick glance and you can understand the entire chapter. So they will definitely help you for the reasons. As Priyanka has also told you that this time, I think most of the students have already started the revision phase. They have already studied at least 2 rounds of study as per my belief. Even if you have not studied it, even if you have studied once, there is no worry. You can now focus more on the revision part, and you can conceptually clear your concept in such a manner that you can attempt the question papers in the stimulated time periods. And moreover, in accounting, the main problem is that the students complained the question paper was lengthy. They were not able to complete the question paper for this. Like, you have a reading time of 15 minutes. So what you can do in that 15 minutes? At least you can decide about the sequence of the questions you will be attempting. So once your priorities are clear, you know what questions you have to attempt and what is the sequence in which you will be attempting the questions, then I think the half problem is solved, and you have completed the half race. So this will give you the clear picture of the questions. And while solving the questions, you have to see that what adjustments are important, where you have to give more weightage. Working notes are also very important to be given in the questions. So while attempting the questions, you have to focus on the working notes also. Any adjustments are not left. Working notes are not left. Proper formats are being followed. And all the things, all the requirements of the questions you have done, these are the things which you have to consider while attempting the question paper. So what should be your plan of study? Your plan of study should be like this. You should study all the topics in an integrated manner. What does it mean that you have to study all the topics in an integrated manner? It means that while studying the inventory, you have to consider the accounting concept also. You have to consider the accounting concept in the sense like what inventory has to be valued at cost or NRV, whichever is less. So this is a prudence concept. This is a conservatism concept. You cannot even if the market value of inventory is higher, but you cannot go beyond the cost price. So NPO is to be studied along with Chapter 7 concept. In Chapter 7, you have preparation of financial statements of non-corporate entities. But while studying the NPO, the entire concept of Chapter 7 is covered, and you have to see that the NPO and proprietors financial statement are no more different. This only thing is that there you have to prepare one additional account, receipts and payments account. Income and expenditure account is just like profit and loss account. So these type of terminologies you have to keep in mind while solving the questions and while studying the chapters. And the objective should be to gain ability in answering the practical questions. So we have to understand the theory in such a manner that after reading the theory portion of the chapter, we are able to solve the problems. We can start solving the problems. As we have already mentioned, that you can translate your knowledge into brief notes by writing the tricky points, by writing the summary of all the adjustments. Like in Chapter 7, there are so many adjustments, so that you can write at one place in your register so that you can later revise them while attempting the questions. And you may also support your, you can also prepare flowcharts form, tabular presentations, or anything which is convenient to you, which can help you at later stages of preparation for revision, so that will reduce your time. Like first round of study may take you 7 or 8 hours for a particular chapter, maybe more than that. Second round of study may involve you for 4 or 5 hours only, and third round of study may involve you for only 2 hours. So you can see that once you are thorough, once you have started becoming thorough with the chapters, the later revisions will give you less time. They will not take more time. So this is the main crux of your preparation. And as you know that from May 22, now it is June 22, the relevant notified sections of Companies Act 2013 are applicable, and they have been incorporated. All the relevant sections have been incorporated in the September 2021 edition. So you have to refer September 2021 edition. If you are having any earlier edition of the study material, it's advised that you, for at least company accounts portion, you are advised to refer the latest chapter 10. And strategy for preparation, Prema, would you like to say?
Yes, acquaint yourself with the syllabus of principles and practice of the company. All the concepts which are covered in our study material will only come in the paper. So please refer study material itself. Whenever you're doing the second revision, also dedicate time to each and every question. So you have to allow yourself, okay, this accounting for sole proprietor, financial statement for sole proprietor, you have to do that question in 15 to 20 minutes only. See, the time management is utmost important for performing well in your CA foundation exam. Assimilate all the knowledge input provided by the Board of Studies. We are only working for you. We will provide new material, new things for you. The referencer for quick revision is a smaller form, a quick revision form to help you to study at the time of, to prepare at the time of exam. You might have only 1 or 2 hours for a particular chapter that time, but the base should be clear. You might not get time to do question before exam, just one day before exam, each and every question 1 day before exam. So you can revise the base. The basis should be very important. Plan your studies in a manner that keep your time for at least 2 rounds of revision that we have already told you. The 2 rounds of revision is very important. Solving each and every question of the study material. See, if you solve the question for one time, you'll be taking 20 minutes. In another go, you might take 15 minutes. And while doing the paper, the question paper will be blend of difficult and easier question. If you have already solved that question at your home, then you might take only 12 to 13 minutes in the paper to solve that question. So additional 4-5 minutes you'll be able to devote on the difficult question. So, and visit BOS announcement and BOS knowledge portal on ICAI website regular basis. On weekly basis, you can visit that. There may be any announcements. See, this announcement of paper, postponement of paper just came yesterday. So keep visiting.
So basically we can say that while attempting the question paper in the examination hall, students generally have to keep this in mind that they will get 20 to question in around 20 to 25 minutes each question, because they have to solve 5 questions.
Yes.
And in total they have to solve 5 questions. So if they allot 20 to 25 minutes for each question, so at least 10-15 minutes they will get at the last to revise the paper and to find out whatever mistakes they have committed. If they want to rectify something, they can do. So this is very important, that you have to consider the time limits, and this is the reason we are advising you to attempt mock test papers, because if they attempt mock test papers in simulated examination conditions, then definitely they will gain confidence, and they will be this will be basically training ground for them to attempt the examination in the real examination hall. So this is all about the strategy. And what about the structure of the question paper? Yeah, now we will discuss about the structure of the question paper. As you know, that the entire syllabus of your foundation level principles and practice of accounting. First of all, I would also like to tell you that the paper of accounting at intermediate also, you will be able to understand the syllabus of intermediate only when you are thorough with the foundation concepts. So the base of accounting is being formulated at foundation level through this paper. Because the base of accounting is the accounting concepts, convention, and postulates, without which you will not be able to understand the advanced topics in intermediate level, whether it's branch accounting, whether it's departmental accounting, whether it's a partnership or company accounts. So you have to understand the theory as well as the practical portion. The syllabus consists of 10 chapters, which are being bifurcated by us to give the complete weightage to each and every chapter in 5 sections. Section 1 is basically theoretical framework, where you are having the concept of each and every, like what is accounting, what are the fields of accounting, and what is the role of accountant in the society, all those things. And moreover, you will be understanding the role of AS, Ind AS, what is the background for concepts and conventions. So the first question is very compulsory for foundation paper. And in first question, we will have this will be the compulsory question. In first question, we will have 6 true and false statements with reasoning from each section. From each section, that means you cannot skip any of the section, and true and false of 2 marks each will be there, where you will be asked to give the true or false. You have to justify also by giving the suitable reasoning. And from section 1 itself, additional question of 4 marks will be asked, and it means from section 1, basically you have to focus from that angle, that definitely 4 or 5 marks study question will be asked on this particular topic. And under section 2, it's a very important section. Under section 2, you have to either an 8 marks problem will cover or a 6 marks problem will be asked. It's a complete accounting process where from the recording of transaction to the preparation of trial balance we are covering, including the rectification of errors. So this is a complete accounting cycle basically. Only preparation of financial statements we are covering in chapter 7, which we are not covering here. So this is very important. This accounting process, chapter of accounting process is very important to be understood, because otherwise you will not be able to understand the next level topics. Then we have BRS is covered here, inventories is covered here, and depreciation is covered here. So from all these topics, basically the weightage of this particular section is around 25 to 30%. 25 to 30%. So you can understand the relevance of this particular section. This is very important section. And the type of the questions which can be asked. The type of the questions are generally 6 to 8 marks questions are being asked on this particular topic. Not a full-fledged question, but the questions will be asked in parts from this particular section. Then we have section 3. Section 3 is accounting for special transactions, and the weightage is 15 to 20% of this particular section. So this is also not, we cannot say this section is less important. This section is also having 15 to 20% weightage. And under this section, we are having bills of exchange, promissory notes, sale of goods on approval, and consignments. average due date and account current. Now we have to understand that what type of question will be asked from which particular chapter. Like in average due date and account current, generally the questions will be asked for 4 or 5 marks only. Very rarely it can happen that the question is asked from account current and it's of 6 or 8 marks. Generally the question is for 4 or 5 marks. Consignment, a big problem can come. From consignment, 8 marks question can be asked in the examination. And bill of exchange and promissory note and sale of goods, again, sale of goods, small problem will be asked, but from bill of exchange, generally 4 to 6 marks or 8 marks question can be also asked. So you have to understand this weightage, because you can study accordingly. You can study the concepts accordingly and you can solve the problems when you are familiar that this particular 4 marks question will be asked from this particular chapter. So you can focus on those type of problems only which are of that particular level. Very simple problems will be asked in foundation. No difficult problems, but it will be a bland. It will be a bland means simple to difficulty level can be little bit complicated. It can be little bit complex. And application oriented questions will be asked, which will be having the simple difficulty level of these particular topics. Then we have section 4. Under section 4, we have final accounts of sole proprietors, partnership, and financial statements of not-profit organization. You can see the beauty of this particular section. We have combined all the interconnected chapters at one place, where we have to prepare the financial statements of either sole proprietors or partnerships or NPOs. In partnership is again, you have to understand the question like a storyline. You have to understand the question like when the partner is being admitted, now when what is the change in the profit sharing ratio, what is the sacrificing or gaining ratio. So accordingly, you have to solve the question. You have to make the adjustments, and then you have to proceed for the journal entries or the reconstituted balance sheet. You have to frame that. And final accounts of sole proprietors and NPOs, as I have already mentioned, that they are interconnected topics. Basically, what you have to understand, you will be given the trial balance, and you will be given the trial balance along with certain adjustment given in the question. And from that information, you have to prepare the trading account, profit and loss account, and balance sheet. In case of manufacturing concerns, one more additional account will be there, which is manufacturing account. In section 5, we have what is the weightage of section 4? Let me also tell you the weightage of section 4 is 30 to 40%. So you can see that this section is very important. It is the most important section, rather we can say. And full-fledged question will be asked, either from NPO or from partnership or from sole proprietor, or even from 2 topics. One from partnership or one from NPO or sole proprietor. A full-fledged question of 16 marks, 15 marks can be asked from this. So you have to solve the questions from these particular 3 chapters more. You have to gain confidence, because if you are stuck up in this particular problem, your balance sheet may not tally. So that will confuse you at the time of attempting the questions. If the balance sheet does not tally, then definitely your confidence will be lost, and you will not be able to succeed for the next questions. So these particular 3 topics are very important. You have to understand it clearly. The concepts you have to understand clearly. All the adjustments, opening stock, closing stock, provision for bad debts, and everything should be clear to you. What adjustment you have to make for writing off of bad debts, making provision for bad debts, and accruing outstanding. You have to give some expenses outstanding. You have to follow the concept of accrual while preparing the financial statements. So as you know that all the topics are connected. Accrual concept we have studied in chapter 2, but now we are using that concept while preparing financial statement also, while preparing NPO also. Because in NPO, subscription outstanding, subscription receivable, legacy, all these things we have to consider. Admission fee capitalize, we have to capitalize or not capitalize. What about legacy we have to do? Donations, what treatment we have to do? Then we have section 5. In section 5, we are having 10 to 15% weightage. So it means section 5 is basically little bit we can say less important, but this is only one chapter. One chapter of 3 units where we have less number of problems, and even the you can understand it in lesser time. We have only covering the basic aspects of company accounts. We are covering issue of shares and issue of debentures, and nothing beyond that. Issue of shares and issue of debentures are basically covered over there. So basically this is regarding the section wise weightage. And what about the structure of the question paper is that we will be having question number 1. Question number 1 will be covering the 12 marks to and falls from entire syllabus. Then we will be having one short question from section 1 and short application oriented question from section 2. Short application oriented question, not very big, only 4 marks. In question number 2, again we will be having 2 or 3 application oriented questions based on section 2. Section 2, as we have already mentioned, that what is in section 2? Section 2 is accounting process, BRS, inventories and acquisition. Then we will be having question number 3. Question number 3 may have 2 or 3 parts from accounting for special transactions, means a mixture of questions. 20 marks question will be there, but a mixture of questions, maybe 4 marks from bill of exchange, 10 marks from consignment, and 4 or 5 marks from sale on approval. 1 or 2 portions may be left, but we cannot say that which particular unit will be left, from which particular unit the question will not be there. We cannot say. So we have to understand. We have to solve the entire chapter. We cannot leave any particular unit as such. In question number 4, again we have section 4. In question number 4, we have section 4. So as we have already mentioned, that this section is very important. One full-fledged question will be asked either from sole proprietor or partnership or NPO, or a mixture of 2. Means 8 marks question, 8 plus 4 or 10 plus 10. And in question number 6, we are having again 2 parts. One question will be from section 5, that is company accounts, and the other question will be from section 2, that is accounting process, as we have already explained. So this will give you the complete idea. This will give you the complete idea of how to prepare for the chapters, as what is the weightage of each particular section, with what type of question, which type of question will be asked from which particular chapter. Now,
even in section 5 also, see if it is in introduction to company's account, usually the question asks for the journal entries. If you are able to understand all the basic concepts of section 5 of company's account, then you might be able to solve the question in a very lesser time, and you can dedicate that time in the difficult question. So this chapter, you can easily gain marks in this chapter, because usually the questions relates to the forfeiture, reissues. Usually question comes from that part only. So 15 marks are very easy to gain in this chapter. And one question is for true and false for 2 marks. So if you understand this concept very well, you'll be able to solve this question.
It means 17 marks you can gain.
You can easily gain 17 marks by understanding this chapter. This chapter is small also, and you might require lesser practice, because if you are able to understand the concept, you'll be able to solve the question. You'll be able to solve all the entries.
And moreover, the CBSE curriculum of 12th level
exactly
is
they're
exactly also covering their
yes. They're covering the sole proprietor also, partnership also. So it will not be very difficult for you to understand and practice this question. More practice is required in section 4. The time management and practice more is required in section 4.
It's a very lengthy.
Yes.
Actually, section 4 is a very lengthy. We can say it's a very lengthy section, because all the chapters are very important to be studied, and moreover they are very tricky also.
Exactly.
Because at one adjustment, if you are lost, in one adjustment, if you are confused, you will not be able to solve the question. Your balance sheet will not tally. That will again waste your crucial time.
And sometimes it also happens, we tend to read only what we want to read. Sometimes we have done a similar question in our practice, and we tend to read only that line only, but the adjustment is little different, and we stuck up at the end, our balance sheet is not tallied.
Or maybe by reading the figures from the question paper, the figures are jumbled up.
Exactly.
We are not, one zero is missed or one additional zero is put while attempting the answers. So those type of problematic areas are also there, which will
which should be taken care of very carefully. Maybe this, in haste, we might do the question in the same manner which we have already practiced. So which could lead to not tallying your balance sheet, which could lead to wrong answer. You might not know, after coming home you came to know, oh, this adjustment has to be done. So be careful while reading the question paper, which is very important at this stage. So this would be very, we have already told you about all the sections. So solving the paper, scoring good marks is not that difficult, which you think is difficult. It is not that difficult. Beauty of the question paper would be it is a blend of all the basic question also and the full-fledged question also. See, section 1 and 2 tell you the basis of the accounting. All these basics are covered. Where section 4 and 5 tell you the advanced level, how to solve the questions, how to solve in any business environment, when you go in a business environment, how to solve that question. Section 3, 4, 5 tell you about those things. So the question paper would be blend of everything. You please understand the basic. You cannot leave even basic. You cannot leave even the advanced level.
Section 1 and 2 are very important. They are very crucial because they are the basic chapters. That's what we have already told you, that without understanding the base of the accounting, without understanding the concept of accounting concept conventions, you will not be able to succeed in understanding the section 3, where you have to understand that what is the how to go for consignment, or how to account for goods sent on approval basis, whether they are considered as closing stock or whether they are considered as actual sales. So all these things are really important, and while attempting the questions in the examination hall, as we know that you have studied all the concepts very well, but the main problem is while attempting the questions in the examination hall, you are fumble, you are not able to, your confidence is lost and you are not able to solve the question paper within the time. So that's why we are advising you to take full advantage of the reading time.
Absolutely.
Full advantage of the reading time, where you can decide about the sequence of the questions which you will be attempting, which question you will be leaving, because you have choice of also. Sometimes this is also the problem. This becomes difficult because A or B part is there. We know A part but we do not know B part. So in another question again this type of problem occurs.
Then give importance to that where you know which has more weightage. Suppose in A part that is of 10 marks, so you give that question more, you do that question more which you know better and you have more weightage for that question. And try to solve that question first, which you already know better, you know the best, and try to solve each and every part of one question at one place only. Suppose you know question number 4 in a best manner, so do for question number 4 first, but try to attempt all the parts of question number 4 at one place.
Sequence of the question is not important. It's not there that you have to solve question number 1 initially, and you can solve question number 5 or 6 also before that. That is not important, but that is very sure that all the parts of one particular question should be attempted in one place. It should not be like this, like 1A you are doing, then you are doing second A, and then you are attempting 1B. That should not be there, because that may be not evaluated later. Your second parts may not be evaluated by the exam.
You please write it very clearly with the need writing. You make it easier for the examiner to check your question, your answer sheet. He'll make it easier for you to give you good marks.
Definitely, you have to give comfort to the examiner so that you can feel comfortable after seeing the results.
Absolutely. Can you see the query?
Yeah.
Okay, let's start with chapter 1. We'll take the queries later on another 5 minutes.
In chapter 1, basically we are covering the objectives of accounting. What exactly is accounting? Accounting is systematic recording of transaction. So what exactly is systematic recording of transaction? You have to understand this, that we have to give the journal entries. First of all, you have to understand what is monetary item and what is non-monetary item. Because for monetary item only we will be doing the recording. Accounting is only concerned with monetary items, not for non-monetary. Like the quality of staff, the human caliber, we are not accounting for that. We are only recording the purchases, we are recording the sales, we are all the monetary items, we are purchasing the fixed asset, or we are those things we are recording. How will we record? We will maintain the subsidiary books. First of all, we will pass a journal entry. Journal entry will be recorded in primary books of accounting, that is subsidiary books. However, cash book is one exception. Cash book is subsidiary as well as principal book. Then we will prepare the ledger through which all the ledger balances will be accumulated in one place and trial balance will be formulated. Through trial balance, we can ascertain the result. Through trial balance, how can we ascertain the result? We will prepare the financial statement. After trial balance, we can prepare the financial statement and we can find out the profit or loss. Why it is so important? If one person is carrying on the business for last 15 months, maybe more than one accounting period, he will be interested in knowing what exactly he has earned or what exactly he has lost. So that cannot be ascertained without accounting. We have to see that we have to maintain records to find out all income, to find out all expenditure, so that we can at the later point of time, whenever we want, we can arrive at the net profit or loss. हमने क्या खोया या क्या पाया, अगर ये हमें नहीं पता होगा या अगर हमें नहीं जानने की इच्छा होगी तो the whole concept of accounting is lost. The basic concept of accounting, the basic purpose of accounting is to give us the insight about what we have earned or what we have lost. Then ascertainment of financial position of the business by preparing balance sheet at a particular point of time. So we have to give the net worth of the business at particular point of time. What is the exact position of our liabilities and assets at one particular point of time? What is the state of affairs? Then we have to provide the information to the user for rational decision making. Definitely for shareholders, for the market, for the lenders, for the bankers, for the customers, they may be interested in knowing whether this particular business is earning or whether this particular business is going into solvency position or it may be going for insolvency steps in next phase. So this is very important. So this is the main purpose of accounting, that it will give the information to the user. What information he or she wants to take benefit of. To know the solvency position, that is whether business has sufficient funds to pay off its lenders, to pay off its liabilities. So this is about the objectives of accounting, and this is through this we can understand, through this objectives of accounting we can understand the role of basically recording. Recording means the role of our journals, ledgers, trial balance. Why we are keeping all this? Why we are doing all such exercise of recording each and everything in our ledgers? So that is the main purpose, because without recording of all the transactions, in one particular place, at one particular place means we are having subsidiary books as well as we are having primary books. So through these books only we can prepare the trial balance at the later point of time. This is basically the root of our maintenance of accounts. After objectives of accounting, we have bookkeeping and recording of transactions. In bookkeeping, we are having the exercise of recording all the transactions in journal. First in journal, then in ledger, and then we can ascertain the financial effect. Then we can understand the financial effect by preparing the trial balance and financial statements. This is all we are covering about chapter 1 and chapter 2, crucial points. You have to understand what is accounting, what is the role of accounting in the society, what are the subfields of accounting, and how the accounting is giving benefit to the society by providing the exact financial position of any business particular entity. Yeah, let us take the queries first. Ma'am, we have to write with black pen only. I think, yeah, yes, you have to write with black pen only in the examination. And you're not required to send the mock test papers after solving. All the answers of the mock test papers, we are hosting it on our BS Knowledge portal, and through which you can see the answers, and you can evaluate your performance and compare your answers with mock test papers answers which have been hosted on the BS Knowledge portal, and through which you can compare and see your deficiencies, see the mistakes which have been committed by you. And one student is asking whether it's true that examinations have been postponed. Yes, it's a complete notification has come yesterday. You can also access the website for that. Now your exams are scheduled for 24th June, so you can prepare your.
We host the solution of MPP after 24 hours, so we keep checking the website for that.
After yeah. Can it be possible my balance sheet carrying the solution? Yeah, very yes.
Yes.
If you have completely ignored one particular adjustment, then the solution will tally. The balance sheet will tally.
Yes, the balance sheet. Since it's a double entry, so you might have left the effect in both the places, so it can tally easily. How to written solve this paper? We've already explained you many times that how to solve your paper. Would I get the marks accordingly?
So actually, the marks are being allotted for each and every adjustment. So that particular adjustment will definitely, what is the significance of that particular adjustment? That has to be considered. The adjustment is very important. Like if you have not shown the closing stock on the credit side of trial balance, then it's a big error. So maybe weightage is more. Maybe 2 marks or 3 marks will be deducted for this particular question of 16 marks or 15 marks. But otherwise, definitely each and every proportionate marking is there. The system of proportionate marking is there. Each and every adjustment of the question is given suitable marking, and accordingly only we get the marks in your answer sheet. It's not like this that if your final answer is wrong, maybe in between adjustments are correct, you will be awarded 0 marks. And if the final answer is incorrect and all the things are correct, then only maybe because of totaling or some clerical error you are not able to carry the balance sheet. Then also you will be only losing only half or 1 mark, not more than that. And for all the adjustments which you have attempted correctly, you will definitely gain the marks.
That is why we used to say don't devote that much time on a question on a balance sheet if you are unable to tally. If you are sure that you have done all the adjustment correctly, you leave that question and move apart. Move for the next question. Otherwise, your time will be gone on that question only. Ma'am, can we use pencil to draw the account? This is not necessary. Even if you write it if you draw an account with pen also, but neatly, it should be understandable by your examiner. That will also do.
You can use scale.
You can use scale for that.
Blue pen is not allowed in exam. For the maybe examination department has given this instruction very clearly that they have to write through black pen.
Please read the instruction given in admit card very carefully, properly.
Please guide on how to prepare for theory. You have to read the theory again and again. You have to understand that through the study material, if you are reading, it's very crisp. It will not take you much time for each and every particular chapter. You can read the theory before attempting the questions, and you can also refer our quick reference for that particular purpose. If you are having any difficulty in understanding the theory of the content, you can give an eye to our quick reference, and they will definitely guide you. They will definitely help you in because we have recapitulated all the things at one particular place. And that will definitely make you understand the entire chapter in 1 or 2 pages we are covering. So by reading those diagrams, by understanding those diagrams of pictorial presentation, I think we will be able to understand the theory of the chapters.
And usually only direct questions are asked for theory. So it is very easy to solve that, to write that question. Chapter 1 is basically theoretical framework. Usually the questions of theory are asked from chapter 1. So direct questions are asked if you are able to go through the theory, you'll be able to solve it.
Only in true and false,
Yes.
in true and false, the application of the theory may be required, where you have to apply your judgmental skills for attempting the true and false. And sometimes the questions are very tricky in such a nature that you have to understand the theory very clearly. Then only you will be able to justify the statement that whether you will be able to judge the statement that whether it's correct or not. And you also have to, it's not like something that you will give true or false. Whatever you want, you have to justify your answer also. So that's very important, that you have to understand the theory in such a manner that you understand it thoroughly. Not only reading, but you have to understand it thoroughly.
Basically, true and false question is only to judge your understanding of the subject, your mental understanding, the basic understanding. Other paper is for how you have practiced the question, but for theory, the true and false is for understanding your concepts, basically. Judging your concept, how you have understood the concepts and how you apply those concepts.
But as such, if we see that theory is not being asked in the question paper beyond 4 or 6 marks, maybe 4 or maybe 5
to 10. Maybe sometimes 2 questions are asked, or sometimes only 1 question is asked.
But as such, you are not required to write the theory straight away. You have to apply your understanding of the theory while doing the practical problems and while attempting the true and false questions. So we are not advising you to read the theory from that angle, that you have to learn it and you have to reproduce it in your answer. That's we do not want.
You can write in your own language, but you'll be able to write only if you have understood that concept. Can we go ahead to the
yeah? So yeah. We have already understood the objectives of accounting, and now we are trying to cover the bookkeeping and recording of transactions, as we have already explained that also. That for ascertainment of financial result, for ascertainment of financial position on a particular day, we are recording all the transactions in our journal and ledger, and then we are preparing the financial statements to trial balance. So the stage of to reach the trial balance is very important, and after preparing the trial balance only we can prepare the financial statements. It's very important to understand that thing. What are the subfields of accounting? We can see in our chapter also the subfields of accounting are financial accounting, cost accounting, social responsibility accounting, and management accounting, human resource accounting. There is a technical which I think in the PPT we are not able to move it further, but still we are continuing with this. You have to understand the objectives of accounting, and you have to understand the accounting concepts, principles, and conventions. What exactly concepts? As you all know, that accounting concepts are the assumptions, are the postulates on the basis of which the financial statements are being prepared. All these postulates have universal application, and these concepts lay the foundation on which the accounting principles are being formulated. So all the important accounting concepts and conventions we have to understand. Accounting principles are the rules and regulations commonly associated with the theory and procedure of accounting, and they must be followed consistently. Consistently means you have to follow them from one accounting period to another. We cannot change them in between. We have to follow them for a regular period. Unless and until some contingency arises and we have to change it, then only the postulate is to be revised, or then only the application of accounting concept is to be seen, whether we have to change the, like if we are following FIFO or we are following LIFO, then we have to consistently follow it for a regular number of periods, for a number of accounting periods, and we cannot change it in between. Accounting conventions emerge out of accounting practices. Accounting conventions are not accounting concept. Accounting conventions means whatever the business entities have been following as a practice. जो एक tradition बनता चला गया, एक convention बनता चला गया, and which have been commonly adopted by the business entities or by industry. So that has been called as accounting convention. They are not accounting concept as such. They are not accounting postulates as such. They are not the basis on which we are recording the transactions or on which we are preparing the financial statements, but they have been emerged as conventions over a period of time, and now we have started following them because the entire industry, the entire that has been developed as a practice which the entire business community is being following. So these are the important concepts, principles, and conventions which we wanted to just go through once. Like business entity concept, we know that without business entity concept, the recording of transactions cannot take place. We are saying that the business entity and the owner is separate. That's why we are recording drawings. That's why we are recording capital introduction, and we are debiting bank account or cash account and crediting capital account. We are debiting drawings account if something is being withdrawn by the owner of the business. So entity concept is very important. And what about money management concept? Money management concept, we have already told that we are not recording any non-financial, non-monetary aspects of business transactions. That if one employee is very good, we are not recording it as an asset. If one particular training has exaggerated the performance of one particular employee, then the performance parameter we are not judging. We are only mentioning the training cost in our books, which we are writing it as an expenditure. So this is basically money management concept where we are recording the transactions, only those transactions which can be recorded in terms of money. What is periodicity concept? Periodicity concept, the entire life cycle of a business we have to divide somewhere, because otherwise we will not be able to ascertain the financial effects of any particular entity. So the entire life cycle we are dividing in accounting periods. For each particular period, we are preparing the financial statements. अगर हम ऐसा करेंगे कि infinite period के लिए business चले जा रहा है और हम उसकी कहीं पे भी उसको रोकेंगे नहीं, मतलब हम ascertain कैसे करेंगे कि हमें क्या profit हुआ है, क्या loss हुआ. तो बेसिकली जो अकाउंटिंग का मेन पर्पस है वो पीरियोडिसिटी कंसेप्ट के बिना अधूरा है. If the periodicity concept is not being followed, we are not dividing the entire business cycle into various accounting periods, the whole purpose of accounting will get defeated. We have to fix some time frame for which we have to measure the performance of a business entity. Accrual concept, very important concept. We are not recording the transactions. We are not recording the incomes or expenses as and when we are paying or receiving them, but as and when they are accruing. That is the concept. That is a concept due to which we are recording the payables also and recording the receivables. What is matching concept? According to matching concept, all expenses and revenue the same period match with each other to find out the financial result. ऐसा नहीं होगा कि हम इस 1 ईयर में हम रिसीवेबल लेंगे और उसका जो इनकम है वो हम नेक्स्ट ईयर में बुक करेंगे. That cannot happen. We have to book the income and expenditure along with in the same accounting period. What is going concern? Going concern means the financial statements are normally prepared on the assumption that the enterprise is a going concern. It will continue the business for long. Otherwise, all the assets and liabilities have to be recorded at liquidation values, because in that case, we will assume that the business is going to be liquidated today. It's not a going concern. Cost concept, as per this concept, the value of asset is to be determined on the basis of historical concept or historical cost, that is acquisition cost. And what is realization concept? Realization concept means that what value you are realizing, that you have to keep, like cost or NRV, whichever is less. This is the main concept of inventory valuation, that cost or NRV, whichever is less. If the net realizable value is less, we cannot keep inventory at more than realizable value. We cannot keep it at cost. So this is the concept. Dual aspect concept, core of double entry system. Each and every transaction has two aspects. Either you see modern approach or you see traditional approach. Each and every entity, each and every transaction has two aspects, one debit or one credit. If suppose a capital is being introduced by the proprietor in the business, what entry will pass? Bank account debited? Bank account debited to capital account. Or suppose you are selling something for cash, then again bank to sale. So each and every transaction is having two aspects. One is debit or other is credit. If the asset is increased, either the asset will have to be reduced in this particular entry or the liability has to be created. The liability has to be created. So this has to be considered while this is basically the core, this is a rule of all the accounting. If this concept is not being followed, if dual aspect concept is not being followed, the accounting cannot be taken place. We cannot do accounting for any of the transactions. And what is conservatism? Conservatism is basically means that provide for all the losses but do not estimate, do not provide for any future gains. If you are thinking that some gain is going to occur, you have not to consider that in your mind, but you have to provide for all the future losses. Consistency, we have already explained. Materiality concept, that full disclosure is not required. We do not want each and every thing you are recording in your books, only the material ones, only the important ones, the significant ones you have to keep. And going concern, consistency, accrual, these are three fundamental accounting assumptions. If the concepts are being followed, no need to write anything. But if these fundamental accounting assumptions are not followed in your in preparation of a financial statement, definitely you have to give a note that we are not following the fundamental accounting assumption, because it will be presumed by any of the stakeholder that you have prepared the financial statement after following these fundamental accounting assumptions. These are the qualitative characteristics: understandability, relevance, reliability, comparability, materiality, faithful presentation, substance over form, prudence, and completeness. So I think there is nothing to explain much, because the financial statements should be very clear. They should be understood by the stakeholders who will use them for comparing the financial statements. Comparison can be two ways, maybe between different business entities, or maybe for particular single business entity over a period of time. Maybe last year financial statement I may be comparing with this year, or so on. So now capital and revenue expenditure. The definition of capital and revenue expenditure is very important to be understood, and because you have to apply the concept, while solving the problems in the later stage, in the later chapters, maybe preparation of financial statements, you have to see that whether this particular expenditure is going to give benefit for how much period. It's a capital expenditure or not.
If it is a capital expenditure, it means the revenue earning capacity of a business of more than one accounting. The expenditure which has been incurred to help the organization so that the benefit will accrue for more than one accounting period is a capital expenditure. We can take it over the years. Maybe, see, example here is given a purchase of a machine, purchase of a plant, overhauling of second-hand computer. These are all the examples. For example, a plant, we have improved the capacity of a plant, which will give an enduring benefit for over the years. So that is a capital expenditure.
So it means if we are doing repairs for a particular machinery, then it will be considered revenue expenditure. But if you are purchasing a second-hand machinery and before installation, whatever expenditures you are doing, which will increase the earning capacity, earning capacity of the business, they will be considered as a capital expenditure. Otherwise, all the expenditures are considered revenue, which are aimed to give benefit only for one accounting period.
This benefit will be for more than one accounting, and the same way it is the revenue expenditure. That could be a regular or recurring expenditure, or also the purchase of raw material, which we do it on a regular basis. Salary we give it to, or the management expenses we incur on a regular basis, so that to make our business as a continuing body. To make our business continue, we incur revenue expenditure. So these expenditure are made basically short expenditure for less than 1 year, and the benefit is also for less than 1 year. The same way revenue receipt and capital receipt, the nature of these receipts is also the same. The receipts which are obtained in the normal course of business activity, interest income, sale of goods, the normal sale, the bank interest, these are all the regular activities, are all revenue expenditure. And the capital expenditure which are not regular, do not relate to our ongoing business activities, are capital receipts. For example, sale of fixed assets, sale of investment. If we are incurring, if we have an investment, that is, we have interest on investment, that would be a revenue expenditure because we receive interest every year. But yes, if we have sold the investment for an year, that would be a capital receipt. That yes, we receive a lump sum amount as a capital receipt.
So basically, if we are an investment firm or if we are a broker, share broker, then the investment may not, the sale of investment may not be capital because then it may be revenue receipt for me because I am in the business of investment. Otherwise, for a normal investor, the sale of receipt due to from sale of investment is a capital receipt, and whatever interest income we are earning as an investor on that particular investment, that is a revenue receipt.
So it depends upon the nature of the business, how to divide it into capital or revenue. That is.
Contingent asset may be defined as a possible asset that particular business entity. So contingent assets are not to be recorded unless and until we are very sure, but certainty is very there. But while recording contingent liability, we have to see the past events. We have to see that what is the probability that we are going to incur this particular liability. If the probability is very high and we can estimate, we can determine the amount, then we have to record that particular contingent liability. If we are sure that certain amount has to be incurred as a liability, but we are not sure of the amount, then definitely we cannot record this particular contingent liability because we are not sure of the amount itself. So contingent liability is shown only in balance sheet as footnote unless and until we are making the provision for it and we are sure that this contingent liability is going to crystallize, that it's going to be actually increased. The probability is very high for that. So these basically again the concept of conservatism applies here. That contingent assets we are not recording, but contingent liability we are recording as per the concept of conservatism, that we have to book all the possible losses. And contingent asset again, it's a possible asset that arises from past event, but as per present concept, we are not realizing it, and we are not making any note of the contingent asset also in our financial statement unless and until we are very sure of it that we will gain this particular contingent asset, and the amount also we are very sure of that this particular amount we will be gaining from this contingent asset, so on so forth. If it is there, then only we have to book, otherwise we are not required to book it. What about provision? Provision means any amount, definitive provision means any amount written off or retained by way of providing for depreciation, like provision for depreciation or provision for warranties, provision for penalties for non-compliance with statute, provision for doubtful debts, as you see. So basically provisions are come under the definition of expenditures up to certain extent, that you have to book the provision. You have to provide for this particular provision and for this particular reason. Accounting standard, you can, it's a simple thing that all the concept and postulates, conventions we have framed, we have understood. Now what is the regulatory part? Something has to be done as a regulation, otherwise it will be the choice of the business entities whether to abide by that particular concept or convention or not. So what is the statutory part? What is the how can you enforce those concepts or conventions on the business entities to apply them? So that is the reason accounting standards have been issued by the Institute of Chartered Accountants of India, and they have been made mandatory for the business entities to apply. Even the MCA has adopted those accounting standards and made them mandatory for the companies also. So These are the concepts and conventions only, but we have made them in the form of accounting standards in the proper format so that the business entities can apply them. And we can also, the government can also, the ICAI can also enforce their compliance through making them mandatory for all the business entities. Accounting policies means that the method of applying the principles given in the accounting standard. What is the method of accounting? Like in valuation of inventory, we have so many methods. We have so many methods we can apply. Either straight line, we can apply WBV, we can apply time of production unit method. So, which method we have to go for? And when we are applying one particular method, then we have to consistently follow that particular method for a longer period of time, unless and until some statute has changed and it has become mandatory. It has become mandatory for us to change our method of depreciation. Again, in the inventory valuation method, we are having FIFO, specific identification, base stock. Which method we are applying, that has to be considered, and what method we are applying, that again has to be followed consistently for preparation of our financial statements. So this is basically accounting policy is basically the principle which are being adopted. And once we have decided to choose one particular method, one particular policy, we can say it's a method only for accounting. When we are applying one particular policy, then we have to stick to that particular policy unless and until some major contingencies arise and we have to change that particular method. Accounting policy can be selected on the basis of prudence, substance of a form, materiality. Prudence means we have to see the prudence. Prudence is I think the basic concept for all the accounting. We are following the conservatism approach, where we are following prudence means we have to consider all the prospective losses, but not to consider any gain. We are following very conservatism approach. And substance of a form means what is important is that you have to see, you have to go by the substance, not only the form. Like we have to see what type of transaction we are having and what is the substance. Again, that is the only reason that for investment entity we are taking the investment as the inventory, not the investment, because that is a investment company. So the substance has to be considered for each and every transaction, and then only we have to decide the accounting for it, whether it's a we are trading in that particular product or we are not trading in that particular product, whether if we are having some goods which have been sold by us on the approval basis, so whether it's a regular feature for us or whether we are sending just like that as a casual feature, then what accounting actually has to be done is to be considered according to the substance of the transaction. And materiality, again, all the material things only we have to consider in mind while applying the accounting policies and while preparing the financial statements. All unimportant, all non-significant transactions we can leave. Suppose very pretty amount of like 500, 200. We are maybe depending upon the size of that. If the business is earning in lakhs or the business turnover is in lakhs, then we can leave these particular amounts which are not material for us, and we can focus on the accounting of only the material items. Valuation principle of measurement. There are four measurement principles: historical cost, current cost, and realizable and present value. So under each and every historical cost means what we have paid for it. Current cost means what we are going to pay for it at the time. If at the now we are at the present time, if we are going for buying it. Historical cost means like realizable value means that what this particular asset is going to be realized for, what amount if we are going to sell it, what amount. So basically, current cost and realizable value means current cost means if we buy it now, what price we will have to pay, and realizable value means if we are going to sell this particular product, what value we are going to get. And present value consider the concept of discounting. Discounting value of future net cash inflows at the item respective to that category. So basically it is a concept of financial management which we are using And generally, for impairment of assets and all those things, we are covering the concept of present value in our accounting standards, which we are not going to do here. Accounting estimates. Any change in like many of the things we are making as an estimate, like for impairment, for provision of bad debts. Once we have decided that this particular amount was being estimated and we have provided for it, but on later date, it may happen that the estimates have to be revised. There may be a need for revision the estimates because of the change in circumstances. So, in that particular case, when we are revising the estimate, we have to consider the adjustment for the financial statements. Like in that change in method of depreciation is again a change in estimate. For all the prospective years, now we have to consider this as a new rate, as a new method which we are going to apply. Even the change, sometimes the change in rate of depreciation has also to be done. So those things are basically change in accounting estimate. Accounting estimate means whatever parameters we have estimated earlier and now what we are estimating. Suppose for one particular chapter, like let us consider chapter 4 only, inventory. We earlier estimated that we will require the study period of 10 hours for completing this particular chapter. But why actually when we are studying this particular chapter, when we are solving the problems of this particular chapter, we are taking 15 hours. So basically, my timetable was, earlier I estimated the plan of 10 hours for this particular chapter and I had allocated 10 hours for that particular chapter. But now I have to revise my estimate to 15 hours and the whole calculations of my timetable will be recalculated. So whenever change in estimate is there, the connected calculations will need revision, they will be recalculated. So that is the basic purpose of change in accounting estimate.
Let's start with basic accounting procedures. This is your chapter 2 of study material. What is basic accounting procedures? Now we'll go to the double entry. Why do we need double entry? The concept of accounting is totally based on double entry. Every transaction has two effects. We show it in this way. See, the double entry is a system which recognizes and records both the aspects of transaction. For example, we have paid salary from bank. So it requires two transactions. One is salary is paid and the amount is paid from bank. So we need to record these transactions under two heads. One is salary and other is our bank. So every transaction has two impact. We need to understand that every transaction has two impact and it will come at two places while recording the transaction. So we have two approaches to record the transaction. One is our traditional approach, another is our modern approach. What is traditional approach? Traditional approach classifies our account into two parts, which is one is personal account and another is impersonal account. A personal account has three parts, which is natural person like you, me, any other person, normal human being. Artificial person like companies, firms, societies. We register. You must be aware that partnership deed is also registered. Companies are registered, so that is an artificial person. So they are all artificial person. Representative person. Representative personals are usually the outstanding liabilities, prepaid expenses. These are all accounts come under representative persons. So these are all personal accounts. Then we classify it into impersonal account. Impersonal accounts are two accounts. One is real account and other is nominal account. Real account are related to the assets of the business, not the debts. Only related to the assets, plant machinery, buildings, patents. These are all the assets of the business. Nominal account relates to our regular expenses, losses, revenue gains. For example, I told you about the salary. Salary account is our nominal account. Commissions, salary, consignment. These are all nominal account. How to classify these accounts? We have three general rules of counting. What are those? Debit the receiver, credit the giver. Debit what comes in, credit what goes out. Debit all expenses and losses and credit all incomes and gains. All our accounting procedure, everything, all recording, classifying, summarizing, works on these three rules. How to use these rules? Debit the receiver, credit the giver. All the personal account, for all the personal account, your account, mine, company's account, outstanding liabilities, prepaid incomes, for these we use debit the receiver, credit the giver. Whatever we receive, we debit it, and credit the giver is whatever giving we are crediting. Real account comes for all. Debit what comes in, credit what goes out. What are real accounts? Real accounts are plant machinery. These are assets accounts. For that we use debit what comes in, credit what goes out. And for nominal account, debit all expenses and losses, credit all gains. You have in later chapters you have studied P&L account, where you can see all the expenses are being debited. We are using this this principle there. Debit all expenses and credit all incomes and gains. This is our traditional way of accounting, traditional method of accounting. We have one modern approach qualification also, classification also. The modern approach is, why do we follow modern approach? Because there are some items which are not covered in our traditional approach. Very few items which are not covered in our traditional approach. We follow it a modern approach, which is a very simple approach. We classify all our account into 6 parts. All those accounts and what impact will it have, will increase or decrease those accounts. For example, asset account. Asset has a debit balance. When the amount is increased, the amount has to be debited, and when we have to credit, when it is decreasing. For example, liabilities. Liabilities is our credit account. So if the amount is when the amount is to be debited, then it is decreasing, and when the amount is to be credited, when it is increasing. The same way capital account. Capital is also our credit account. The amount, when it is a decrease in our amount, we have to debit it, and increase, obviously it will be credited. Since it is a credit account, so if it is increasing, we'll increase the credit account. Revenue is our credit balance. This is our income. So when the amount is to be, when we are decreasing the amount, expenses are to be debited. Since that means our income is decreasing. So we'll be decreasing that amount. The amount is to be debited, and if our income is increasing, the amount will be credited. Same way expenditure. Expenditure has a debit balance. In P&L account, we debit all expenses. So if it is increasing, we'll debit that, and if it is decreasing, we'll credit that. Same way withdrawal. Withdrawal account has majorly it is drawing account. That is a debit account, and when the amount is to be debited, that when we are increasing, and it is to be credited when it is decreasing. So it is preferable to follow modern approach. It will be easier for you to understand the modern approach. These all principles will help you to create journal entries. Journal entries are creating in it is a journal book. It is created in a chronological manner. That means we are recording all the transactions on day-to-day basis. An accountant keeps a journal book where he records all the transactions. For example, today we have paid wages, so he'll write an entry for wages, that wages to bank. Then the next day he paid salary, next day he incurred any expenses, so he recorded in a day-to-day basis. Now, if I need to know how much wages have been paid during the month, we'll not be able to understand, because in journal entries we'll record all the transactions day by day. We have ledger. Ledger helps you to analyze the total head, where we record all the transactions of a particular period into the same head. For example, we create a ledger for wage. So all the transactions pertaining to that year will come under the wage ledger, and we can analyze, okay, this much amount we have spent on the ledger. So basically, ledger is an analytical form which helps to record, helps to analyze how much amount we have paid. Journal is for recording. Ledger is posted, and the balances which comes from the ledger we post it to our trial balance.
So basically all the balances of the ledgers are being posted to the trial balance, and through which ultimately we are succeeding to preparation of final accounts.
Yes, final accounts. We prepare it. There are 3 types of trial balance. Here also it is already mentioned. After recording the transaction in the journal, recorded entries are classified by
3 methods of preparing the trial balance.
Yes.
Yeah, there are 3 methods by which you can prepare the trial balance, but generally the balance method is followed. All the ledger balances are being taken to the
trial balance. Now we see subsidiary books. Now you already know in journal we maintain the records in chronological form. It is very difficult also. I mean, the transaction could be huge. There could be around 70 to 80 entries or 100 entries in a day. So it will be difficult for a single person to divide the work, or to create a little easier form. We prepare subsidiary book. Subsidiary book is specific cash book, purchase returns, sale returns, bills payables, bills received. Depending upon the nature, how vast our work is, we can prepare all these books. So the work could be delegated to a specific person. Since the person could only handle a purchase book, could only handle a sale book.
And any of the transactions which cannot be recorded in any of the 7 books above, like that has to be recorded in the journal proper. Exactly. Which is not fitting in any of the
7 books. In purchase book, purchase return book, we only record credit purchases, because the cash purchases are recorded in our cash book. Sales, same way, sales return book, only the credit sales. The cash sales would be recorded in our cash book, since we have a separate cash book for all the cash transactions. Now please note, in place of journal, we are preparing all the subsidiary book. All the balances of the subsidiary book will be transferred to the ledger and then through trial balance. But in cash book, we'll be coming to the cash book again in future. So this is basically, we are replacing our journal. What is cash book? We have seen we can also prepare a cash book. Cash book is also one of the primary book. All the cash transactions and bank transactions come under this book. Cash book are also of 3 types. One could be basic cash book, another could be this two column cash book and 3 column cash book. The basic cash book is only 1 receipt and payment. 2 column could be discount and cash, and 3 column could be bank discount and cash. For small payments, we maintain a petty cash book. We can give a small amount. Maybe you have a huge organization and a small payments need to be made for regular and recurring expenses. We can pay some amount of petty cash to our cashier, who can pay in return, who can pay in place of our organization, and in future we can reimburse it every month.
A fixed amount is decided, like maybe 1,000 rupees or 5,000 rupees. So whenever the amount is less than that, if the amount comes 4,500, then again 500 rupees is being reimbursed to the petty cashier, so that the amount of 5,000 is always being there with him to meet the small petty expenses. So these expenses are being recorded in petty cash book only, and the total of those expenses for a particular month, for a particular quarter, that is being posted in the main cash book. So that is basically the saving of time of the main cashier, and the small transactions not being recorded in the cash book. So all these particular small transactions of involving petty cash are being recorded in the petty cash book only.
But now you see, in subsidiary books, they are replacing the journal, where we have to post entry in our ledger and then the trial balance. Cash book in itself is a ledger. That is our primary book. The account is directly posted to our trial balance for this.
So basically, cash book is subsidiary as well as principal. It is journal as well as ledger. It is serving the purpose twofold. It is serving the purpose 2 ways. It is journal as well as ledger.
Coming towards the errors. Since an accountant might not be having that good fundamental knowledge, and you will be a chartered accountant, you should be aware of all the errors that could occur, that can form, which is very important at this stage. So there could be an intentional or unintentional errors, uncommissioned. Being a chartered accountant, you should be aware of all the errors in order to audit your financial statements. What kind of errors it could occur? There are different types of error. One is error of principle. This is an in-principle error. The accountant might not be having that good knowledge. He can treat a capital expenditure as revenue expenditure, or vice versa. So these are transactions which are in contravention with the accounting principle, like treating a purchase of an asset as an expense. For the asset are to be capitalized, we need to show that in our balance sheet. But he might take it to P&L account while purchasing it, that which could impact the profit. The profit would be lower. It will create a wrong impact. So these are all error of principles. And then there could be a clerical errors. The clerical errors like errors of omission. Maybe an accountant have partially or completely omitted to record a transaction, or maybe a partially recorded the wages being paid, wages to bank, but he might have recorded in only wages account, not at bank. So these are all partial, or he might have omitted to record the full transaction. This is a complete omission. And error of a commission may be it is because of wrong posting, wrong side, wrong totaling, the balancing could be wrong. These are all error of commission. The knowledge, it could be due to inappropriate knowledge, or maybe due to clerical errors. And one is a compensating error. There could be some errors. The accountant might have incurred an error which could compensate the loss. Then the trial balance will tally. Or for all these errors, you can see the principle. In principle, also there could be no impact. The trial balance can tally, but also in compensating error, the trial balance can tally, because the one error might compensate to the other thing.
So basically, if it's a complete omission error, if the error of complete omission is there, or there is error of principle, then your trial balance will tally, and they will be called compensating errors as such, because your trial balance, you will not be able to judge it they haven't actually occurred. Because if the trial balance does not tally, that gives you a clear indication that there is some problem in your accounting and there have been certain errors. But compensating errors are more serious because you are not able to see that those errors have actually occurred. So basically, you have to be more cautious, more careful for the compensating errors.
There could be some errors which they at 3 times the errors could occur: before the preparation of financial statement, before trial balance, after trial balance, before preparing the financial statement, or after preparing the financial statement. If the errors have occurred after preparing the financial statement, that means that the error have impacted your profit also. So in order to rectify the error, we need to use P&L adjustment account for that. Since it has already impacted our profit, so in order to recover that profit, to balance that profit, we use P&L adjustment account. Usually the question asks the accountant has committed mistake and finalize the account. So we need to use such P&L adjustment account to solve this question.
Basically, the error has occurred which has impacted the profit and loss of the accounting period last year. That is why we are rectifying it through P&L adjustment account if that particular error has impacted the profit.
We can see the queries also.
In drawing account, can I write revenue receipt as a receipt to obtain the normal course of business and do not affect the asset liability status of the business? Yeah, definitely. Whatever receipt you are earning in the normal course of business, whatever receipt you are getting in the normal course of business, and they relate to your normal business operations, they will be considered as the revenue receipt. Working notes in the format. Yes, definitely. All working notes are required, and wherever you are doing something, wherever you are solving something in your question, your answer, then you have to give a suitable working notes for that, and working notes carry marks. Whatever way you are doing, while attempting the question simultaneously, you can give the working notes, or at the end of the answer, you can give the working notes. You can leave some space for the main solution, and then you can start giving the work. That is also correct. It hardly matters whatever way you are giving, but working notes you have to definitely.
Advertisement expenses in what sense you are asking for revenue and capital?
Advertisement expenses are basically which are as sales promotion, which are incurred to benefit your quantum of sales, which will increase your quantum of sales, and they are considered as a revenue expenditure if they are major expenditure and they are basically having the impact on the longer period of time, then only we can consider for it. Otherwise, generally they are not capital, they are in revenue nature only.
First read. Ma'am, is the order of the question attempted is necessary?
Renjim Trivedi is asking for that is the order of questions necessary? No, it's not necessary. You can attempt the questions the way you want to attempt, and the sequence of the questions you can change. There is no hard and fast rule for that, but you have to consider that all parts of one particular question should be attempted at one place only.
Is asking, is it enough to prepare for only from study material? I say, yes, it is enough to prepare for practice hard. You'll be able to secure good marks. All the concepts will be asked from only study material.
Manisha, we have already answered you that you can draw the account with pencil. There is no as such, there is no problem, but you can use pen also. And Bhumika, ma'am, insurance claim received and all abnormal gain. All abnormal gain are not captured. Generally not, but it depends upon the nature of the gain. It depends upon the nature of the gain. Insurance claim received generally does not relate to the normal business operations, so may be considered as a specific case. It may be considered as a capital receipt if it relates to the fixed asset. If it relates to the fixed asset, but otherwise it's in the normal course of business. Like suppose you are sending some goods to your consignee on frequent basis, and then you receive something as insurance receipt. The goods are being lost during transit, then it may be a revenue receipt. Yeah. So that has to be considered after judging, after seeing the transaction for which we are receiving the item for which we are receiving the insurance claim. What is interest system of petty cash book? Interest system of petty cash book is basically reimbursement sort of system where a fixed amount is being allotted for the petty cashier, and that amount always has to be maintained by him. If that amount falls below that, then definitely from main cash, the cash is being, the difference amount of cash is being reimbursed to the petty cashier so that he can have the same amount each and every month for the petty cashier.
At the beginning of month, the cashier is given a certain amount which he has to maintain.
Maybe fixed at 5,000 or maybe fixed at 10,000 depending upon the size of the.
Maybe in the middle of the month, the level goes down, so he takes the amount again from that. He has to maintain that specific amount.
I think Bhumika, now the system of interest, system of petty cash book is clear to you.
Let's go to the PPT again. Okay. Coming towards bank reconciliation statement, we are already aware that we prepare a cash book. So cash book also have a bank column. Now we have bank also prepare a single book. We keep our account in our bank. Bank also prepare an account which is prepare a book of our account, which we call it as bank passbook, bank statements. You are already aware. So there could be differences in both the transactions, both the books. I might have recorded some transaction, bank might have recorded some transaction which I might not. So in order to reconcile the process of reconciliation is known as bank reconciliation statement. Considering our cash book, in our cash book only the bank column. We're talking about the bank column. The bank column has debit receipts where we pass it. The receipts have debit balance and payments have credit balance. And our bank statements, our bank passbook is totally a mirror image of our cash book, which is the receipts are credit and the payments are debit there. So statement identifying and reconciling the difference between the bank balance as per cash book and bank balance as per passbook. The passbook are all bank statements and bank passbook. BRS is prepared to find out the reasons for the differences as per the cash book.
Yeah, actually on a one particular date, the balance as per the bank balance shown by our cash book should tally with the actual bank balance in our bank statement. So that is and generally it is not like this. So we have to ascertain the reasons for that, and we have to prepare a statement through which we can tally. We know what are the checks issued but not presented to the bank. What are the bank charges which have been debited by the bank to our account? What are the what are the checks which have been deposited by us but not cleared? So all these type of things which are normal in our day-to-day business transactions. So we have to see that what is the reason for this, and we have to by finding all 10-15 differences, we will do the plus minus adjustment and we will make the bank balance as per our bank passbook tally with the bank's column of our cash book, and that is that is basically the main purpose. Yeah, the main purpose of our DRS preparation.
That amount will go there in our trial balance and for the financial statement. So the errors could be the timing difference, or could be the errors arising only the bank transaction, maybe bank charges, bank interest that we have not recorded in our cash book, or the errors could have occurred. The bank errors could have occurred. We have also occurred the errors. So these are all these all should be there in our bank reconciliation statement. Sometimes the question is also from how to prepare adjusted cash flow. So all those errors which are occurred by bank and the bank transactions are all recorded in our adjusted cash book. These are all recorded in our adjusted cash book. Adjusted cash book means since we are correcting our cash book and then we are putting the balance in our bank reconciliation statement. The timing differences reconciliation are not covered here in adjusted cash book. They come directly in our BRS, but in our adjusted cash book, all the corrections done, all the errors done by bank, as well as the charges imposed by bank are to be there in our adjusted cash book.
So basically, what we have not done for adjustment, what we have not done, but they should have been done.
Yes,
they have been adjusted in our cash book. Yeah, I think we are running short of time, and now we will be moving a little bit faster. Yeah. Under valuation of inventories, we know what is inventory. Inventory means the stock which we are having of the finished goods, work in progress, and raw materials, stores and spare parts. And what is the purpose of ascertainment of valuation of inventory? What is the purpose of valuing it? To ascertain the true profits, to ascertain our financial position on a particular date, because our assets constitute inventory also. Inventory constitutes a major portion of our assets. PPA and inventory, they are the main components of our assets. And we have to comply with AS2 accounting standard 2, which is of valuation of inventories. So generally the principle for valuation of inventories is cost or NRV, whichever is less, means cost or net realizable value. Net realizable value means market value at which we are selling it minus the cost of realizing it minus the cost of selling our inventory. So whatever value is less, we have to consider that. If cost is more, we cannot keep our inventory at the higher values. So we have to adjust this difference in our P&L account through taking the lower value of inventory on the credit side of our trading account. So cost excludes storage cost, interest cost, abnormal losses, administration overhead, and selling. So whatever cost we are basically covering it till our plant, till our location, whatever costs are being incurred by us to arrive to get into that particular position. Only those costs are being covered, including transportation. All those costs, not beyond that. So that is why the storage cost, interest costs are not being covered. Administration overhead and selling and distribution overheads are also not being covered as part and parcel of our inventory costs. And methods of inventory valuation too. However, there are many methods of inventory valuation. The two important ones are LIFO and FIFO, and specific identification method. LIFO means last in first out. Whatever we are buying at last, that we will be issuing for sales at first or issuing for our own consumption at first. And FIFO means whatever we had purchased at the earliest, that we will be issuing at first to for either for our purpose or for sales. And specific identification means that a particular product has been purchased for a particular purpose, then only that particular purpose will be allocated for that particular purpose. So here we are able to specifically, identify that product. There are many more methods of inventory valuation also. We are not covering right now because of lack of time. But you should understand the purpose of inventory valuation. That purpose is that we have to ascertain value of our stocks on a particular date, which we can fill in our balance sheet and which we can use for our preparation of final accounts, like for preparation of trading account. And for raw materials, definitely the value will come under manufacturing account. And inventory record system, we are having two inventory record systems, periodic inventory record system and perpetual inventory record system. In periodic inventory system, it's a method of ascertaining inventory by actual physical count of all the inventory at a particular date. But in perpetual, we are maintaining the proper record of issues and receipts, and on a particular date, we can see the balance. We can see the balance in our that inventory account, inventory record, and we can judge. We can come to know that what particular item is there, and how much is the leftover for that particular item. Because any entity may have 2 or 3 or more than 3 items for a particular A, B, C item may be there, or only one product may be involved in that. So perpetual inventory system is basically more exact. Perpetual inventory system is basically giving you the recording of inventory balance after each receipt and issue, but under periodic inventory system, on a particular date, you have to go and you have to physically count the inventory. Then only you will be able to know that what is the value of your inventory, because you are not keeping any record as such under periodic inventory system for all the items concerned. And what about depreciation? Is depreciation of a particular item of property, plant and equipment is basically due to natural wear and tear. If you have purchased one machine for rupees 10 lakh 5 years back, the value of it might have undergone change because of usage, time passage and wear and tear. Even if you buy a car, then definitely after 1 year, the value of car decreases because of depreciation only. So depreciation is a major component of an expense of any particular business entity, because there are so many items of property, plant and equipment, maybe building, machinery, which are being continuously run for the purpose of earning revenue for a business entity. Again, under depreciation, we have methods which we and each and every method will give you a different amount of depreciation. So once the firm has to decide, once the business entity has to decide that which particular method it will be planning to go for, and once we have decided that we will go by WD, then we have to consistently follow that particular method unless and until that, over a period of time, unless and until the change is actually required to comply with certain statutes, or there is a definite need for the change in method of depreciation. And the method of depreciation, so you can see how many methods we are having: straight line, fixed installment, straight line or fixed installment, reducing balance or WDV, sum of year basis, and production unit method, machine hour and depletion method. We are not going to explain each and every method right now. However, the main crux is that whenever you are applying one particular method, whenever you have started applying one particular method of depreciation, you have to consistently follow that particular method of depreciation. And the depreciation method applied to an asset should be reviewed at least at each financial year, and if there has been a significant change in the expected pattern of consumption of future economic benefits in the asset, then only the method should be changed. Otherwise, the method should not be changed. And as per new AS 10, whenever there is a change in method of depreciation, earlier we used to provide for retrospective effect, but now, as per AS 10, the day when we are changing the method of depreciation, from the current date only, we will apply the new method, and for the future only it will be applied. We will not be doing the previous calculations. Okay? We will not be going to the date when the asset was actually acquired, and we will not be doing the retrospective calculations. So the change in method of depreciation will affect only the current accounting period and the future accounting periods, not the previous ones. This is made important. And what about the change in useful life? Useful life is again a very important concept for the depreciation. Whenever you are buying a particular item of PPE, whenever you are buying a particular machinery, you know that this particular machinery will have 5 years of life, or working life 10 years. So that is basically the useful life, during which you have to provide the depreciation. After useful life, the value of the asset will be discarded from the books. It will not be shown in the books because it will either become zero or it will be very negligible. It will be discarded. So useful life, whenever there is a change in the useful life of the item of PP, then also it will be considered a change in accounting estimate, and it will be considered from the future date, from the current period only, and change in useful life is not going to impact the previous accounting periods. Bills of exchange, in bills of exchange, what is actually bill of exchange? Bill of exchange is a unconditional order to pay by the drawer. Unconditional order to pay by the drawer. Like, it's not the drawer who is paying. Drawer is making the bill of exchange, and he will give it to the drawee who will sign it. And after signing it by the drawee, it will become a valid bill of exchange, which will be recorded in the books of drawer as a asset, like a bill receivable. But now the debtor in the books of the supplier or the creditor will be recorded as a bill receivable. So basically, the debtor now will be credited, and BE, yani bill of exchange, will be debited in whose books? In supplier or creditor to whom the payment was to be made. So I think these are very general peculiar features of bill of exchange. That there are three parties: drawer, drawee, and pay. It is signed by the drawer. It is signed by the drawer, but basically it is prepared by the drawer and is signed by the drawee on whom it is being drawn. Then only it becomes a valid bill of exchange. And in bill of exchange, there are certain important adjustments are there for discounting of bill of exchange, for retirement of bill of exchange. Those concepts you have to understand very thoroughly, because in accommodation bills also, when there are two friends are there, who can join one another for mutual help, and they can write a bill among themselves to create the artificial money. Basically, it is being created for the creation of money for a short period of time. We write a bill of exchange, go to bank, discount it, and bank gives us money, and we divide it among selves. So that is a basic concept of accommodation bill. There are illustrations within the study method for this. You can refer those illustrations. And main important thing is that first, when the sale is being made by the supplier to the buyer, then you are writing, suppose B debited or A debited to sales. And now afterwards, when he signs a bill of exchange, and bill of exchange will be debited, and the BE will be debited to debtor. Now debtor is basically removed from your books, and the bill of exchange will come in its place, because bill of exchange is basically a receivable. It will constitute a receivable. So this is the basic purpose of accounting of bill of exchange is very important, because here we have 2-3 important things, as we have told you. Dishonor of bill is there. If dishonor is there, then again what happens? It will become debtor again, and BE will be ready. If there is a dishonor of bill of exchange, because now the person is not able to meet the he will not meet the deadline, and whenever he asks for the money, then he is not able to pay it. So
usually we do bill of exchange for 3 months. At times it happens that debtor is not able to pay at the due date. So he might ask for renewal of the bill, or he might ask for renewal, or maybe at a discount. We might need to charge a discount.
In that case, if the bill is being renewed, then definitely he may ask that a certain portion of my bill may be waived, or certain things like that. And in another case, it may happen that he can ask for interest also.
Yes.
So the amount has to be decided. The amount is being decided by the supplier and the debtor mutually under mutual consent. And then again, if you are going to bank for discounting, the bank account will be debited to BE, and some discount portion will be there that will be taken as a expense in our books. So basically, the principle of the entire concept and terminology of bill of exchange is very simple. The only thing is that you have to see each and every aspect, like when the bill is being signed by the, when it becomes bill of exchange, when the payment is being received, either it's being received or it's being not received, or the bill is being dishonored. If it's being received in normal course of time, then it's fine. Bank account debited to BE will be there. Or sometimes what happens, we endorse the bill of exchange also. There is a concept of endorsement also, that we are having some creditor with us, and then whatever BE we are receiving, we are giving to the our creditor debit. So that is that may also be there. And under endorsement, if the dishonor is there, after endorsement, if the dishonor is there, then again it's a problem for us. Then what will we do? We will debit the debtor again and credit the creditor again, to whom we have debited earlier now, and the debtor whom we have credited, now we have to debit again the creditor. Debtor we have to debit again, and the creditor we have to credit. So these are the important things. Basically, we have to understand the crucial aspects of accounting for bill of exchange. There are 2-3 more adjustments are there. When we discount the bill of exchange, what entry is to be passed? When we are endorsing a bill of exchange, what entry is to be passed? When we are renewing a bill of exchange, what entry is to be? And one more important aspect is insolvency of a debtor. If this particular debtor who has signed a bill of exchange has become insolvent and only 50% is being recovered from his estate. So now 50% is again bad debts. So simple adjustment is there. Bad debts account debited, cash account or bank account to BE. So basically the concept is simple, but only thing is that we have to, accommodation bill sometimes, generally the confusion arises in case of accommodation bill, where we have to divide the proceeds among the friends. So here the problem may be there, but otherwise the bill of exchange topic is very simple topic, and all the adjustments are very simple. They can be easily done by the students. Only accommodation bills, there may be a problem. You have to understand it thoroughly, because in accommodation bill only the thing is that you have to divide the proceeds which you are getting from the bank after discounting in whatever ratio that has been decided by them, and the discounting charges is also being borne by both of them in the ratio 1:3 or 3:1, whatever is being decided among the banks. So that is a terminology for accommodation bill. Then we have sale of goods on approval item basis. 4 or 5 marks question will be asked from the examination perspective from this particular topic. Under accommodation bills or in bill of exchange topic, in bill of exchange topic also 6 to 8 marks problem may be asked, maybe little bit less, but generally 6 to 8 marks problem may be asked on that particular topic. Sale of goods on approval or return basis is basically when we are sending the goods, but we are not sure whether the buyer will keep the goods or not. So basically we are sending the goods to the buyer on approval basis. It is up to his consensus. It is up to his approval whether he will consent for the sale. Now the question is with us that whether we can record the sales or not. So now in accounting for sale of goods on approval basis, we have to consider that what type of transactions, whether these transactions are frequent in nature, whether they are regular feature of our business entity, or whether they are very less. So the accounting of these goods on approval basis depends on this particular basis. If the transactions are very less, very rare, then we consider this as a normal sales only, and when the goods are being returned, then we make the corresponding reversal entry for that. But if the transactions are very numerous and we are sending the goods on frequent basis, then we keep a separate goods on approval account, and all the sales which are being sent on approval basis are recorded in that particular account, and they are booked separately. They are not considered as a sales. They are booked separately. Whenever at the time of preparation of financial statements, only those goods for which the time period elapsed. Suppose 15 days we are giving the time period. So when the 15 days is elapsing, only after that we are considering those sales as the actual sales. Until the time that period is not over, we are considering them as sent on approval basis only, and we are not considering them as sales. So that is a main important thing. Based on, method of accounting based on volume of transactions. Method of accounting based on volume of transactions only. That if we are treating, sending the goods on casual basis, then we are treating it normal sales. If the volume of transactions is very frequent, then we are maintaining sales or return journal and goods. Three accounts are basically we are having the list of three details. Goods and approval basis we will be getting from that. Whatever goods are returned, that we will be getting from that, and whatever the approved goods, those goods only which we will be recording in our sale. And when the goods are sent on approval basis are numerous in nature, then we are maintaining sale or return books because they are very, in that case, they are very much.
There could be few goods which are neither approved nor returned. So we give a specific time, say for example 15 days. After 15 days, we consider that our goods have been approved.
Yeah, even if the buyer has not consented to it and the buyer has not given any information to it, we will presume that our 15 days has elapsed, then we will consider that as sales only.
That the goods have been approved. See, since this 15 days we have just taken as an example. Don't take it in.
That will be specified in the question itself.
Yes.
That will be specified in the question itself.
Consignment.
Yeah, under consignment, what happens? The consignment. In consignment, it's just like a agency. Principal-agent relationship is there, and under consignment, the consignor sends certain goods to consignee for the purpose of further sales. So whatever goods are pending with the consignee at particular point of time, they are basically the inventory of consignor. So here we are preparing the consignment account, and consignment account is basically nominal in nature. It will show the profit or loss which we are having because of consignment. Under consignment account, what is the cost of goods sold? Expenses, they will come under debit side, and under credit side, all the sale proceeds and normal losses, closing inventory, they will be coming under the credit side of consignment account. So by writing all these things in the consignment account, we will be able to know the profit or loss which we have earned or incurred, and all the profit or losses of consignor only. It's of consignor only. The consignee will be given a certain amount of commission only. Now commission again is a normal commission, ordinary commission, del trader commission. If del trader commission is being provided to the consignee, then he will bear the loss of the bad debts also. If some sales have been done on credit basis, and then the debtors have not given the money back to us, so that loss will not be borne by the consignor, but that will be borne by the consignee because it is a commission which we are providing for this. For compensating this loss only, we are providing additional commission to the consignee. And I think this terminology must have been clear. What is pro forma invoice? Pro forma invoice is the invoice sent by the consignor to consignee. And what is account sales? Account sales is the statement sent by the consignee to consignor. But what sales have been made by him to intimate the consignor about the sales made by him, and ownership of goods, whatever the ownership of stock left with the consignee at a particular date is basically with the consignor, because consignor is the owner of the goods. They are just the consignee is just acting as an agent for the consignor. Commission, I have told you, normal commission is the normal commission. Overriding commission is the over and above whatever we are given. Like we can say that if you will say this product for more than ₹100, so whatever above 100 SP, whatever you are able to sell, that amount, out of that amount you will be given the 10%. So that 10%, if ₹100 is the selling price fixed, and if we are saying that above ₹100, if you are able to sell, then whatever above additional amount you are earning, out of that you can have 15% or 10%. So this is the overriding commission. Del trader commission is the risk of bad debts to be borne by the consignee. So we are compensating the consignee for this. So that is why the consignee will not come to us to ask for the loss of bad debts. So this is we have done. Consignment account is a nominal account. It will determine profits, and all the cost of goods sent on consignment will be incurring in the will be basically how will be in under consignment account. Under consignment account, we will be debiting all the goods, the cost of all goods sent to the consignee, plus all the expenses incurred by the consignee as well as by consignor. If the consignor is incurring certain expenses, they will be also noted on the debit side of it because it's a nominal account. As it's a nominal account, it will determine the profits. It will show you the profits or losses. And goods sent in consignment account will be simultaneously prepared to record the goods sent to the consignee. It's a real account. It's basically a stock account. It's a real account. And what about consignee? Consignee is a personal account. Whatever amount will be received or whatever amount will be paid by him to you, that will be as a you are a consignor. If you are a consignor, then it's a consignee will be paying you certain amount. After selling the products, after selling the consigned inventory, whatever is the final impact, final settlement will be made. What amount is to be paid by the consignee to us, that will be reimbursed by him, and the consignee account will be then closed. And consignment stock is a real account. Consignment debtors, stock reserve, they are all personal accounts. Stock reserve is basically when you are sending certain goods at a loaded price. It is more than the price at the cost. So the loading is basically has to be reversed at the time of closing. Whatever inventory, closing inventory, whatever loading is there, that has to be reversed. If the suppose 10,000 goods were consigned at 12,000, so around basically 20% loading is there on 10,000. So that 20% loading has to be reversed at the time of closing stock. Abnormal losses are credited in the consignment account. They are not going to be spread over, and they are not going to reflect impact the actual profit or loss on consignment. So normal losses are being spread over. Normal losses are being considered for the calculation of the closing stock, for the calculation of the revenue earned, but for the abnormal losses, it's not going to incur. Abnormal losses are just going. It may be routed to P&L account or it may be routed to consignment, but ultimately the entire loss of abnormal loss, the entire loss will be going to the P&L account of the consignor unless and until the insurance amount is being received to us. So, and the opposite is the books of consignee. Under consignor, in the books of consignee, consignor account is a personal account. Amount paid or received from him will be finally settled, and commission will be, he will be getting only the commission. So commission will be his income. And bad debts account, if he is getting the direct credit commission, then only this expense will come here. Otherwise, it will go to the consignment. So I think these are the very fundamental things. Normal loss, unavoidable loss cannot be ignored or avoided. And this is going to impact the closing stock, but abnormal losses will not going to impact the closing stock. Average due date. Average due date is a date when there are so many transactions between a debtor and creditor. We have to decide a particular date on which if we pay the amount, there should not be any loss or there should not be any benefit to any particular lender or the borrower. So average due date is basically the concept which is used basically in banks or where the transactions are too much. Average due date accountant, those concepts are there which are being used in the transaction where there are so many transactions between the lender or the borrower or the supplier or the buyer. So it's used in various cases like calculation of interest and drawings of partners, calculation of various bills of exchange due on different dates, and issuance of single bill. For this particular purpose also, you have to find out what amount has to be taken into consideration, what should be the amount of single bill, and at what date the single bill should be drawn. We should not give any disadvantage to any of the parties. To any of the parties means lender or borrower. Amount lent in one installment and repayable in various installments. If you are, suppose you are borrowing 10,000 on one particular date, but repaying in various installments on different dates in the next few years. Average due date is equal to base date plus total amount into number of days from the base date to due date and divided by total amounts. Base date base date is basically flexible date. You can choose any particular date as a base date, but the answer will not change. Whatever date you are considering as base date, the answer will come same. Average due date will not change. Average due date will come same. So while solving the question in the examination, you have generally the opening date. Generally the opening date is considered as a base date. Account current and your average due date are the two concepts which are basically used for the transactions when we are having the frequent transactions among debtor and creditor or borrower and lender. Account current is a running statement of transaction between parties for a given period of time and includes interest allowed or charged on various items. Like in bank, if you are having current account, then bank also follows the concept of account current. Bank follows the concept of account current and it gives you a complete summary of your account, and all the interest calculations are being done according to the transactions. Like suppose on first, what is your opening balance? Then on fifth, what is your balance? Suppose you have withdrawn something, then the balance is less. And on sixth, if you are depositing something, again the balance goes up. So all those balances are being considered as an integral part of your account, and that is why it is called account current. When again the buyer and the supplier, there are too much transactions, then we prepare the account current. There are three methods with the help of interest table, by mean of product of balances. So where basically the days are being considered. Suppose the opening balance is there and the next balance is there. For each and every particular balance, whenever there is a change in the balance due to any transaction between both the parties, the balance gets changed, and we have to consider the number of days, and we have to find the mean of product, and again the mean of product of balances, because multiplication of the two will come here, and we can prepare the account current accordingly. Okay. No, it's not like this. If Bala Santana Lakshmi, it's not like this. If you have written the theory in your own language, even if it's not the complete British language, but you will get marks if it is correct. If for all the correct answers, you will be getting the marks. Okay.
Mr. Petla will be uploading the lecture on this cash book and sale of goods on approval basis. I think the cash book has already been uploaded.
Petridwala is also asking about accommodation bills. Yes, definitely accommodation bills can be asked in the question. And this time also there was a question on accommodation bill, no? Maybe last time.
Yes. Okay, we've covered all the queries.
You can give a quick recap of preparation of financial statements.
Okay. Yes, preparation of financial statements. See, after preparing journal, what all we have to do? Journal, ledger, trial balance. After preparing that, we have to prepare the trading P&L account and finance statement. This will give us the journal, ledger, trial balance will not give us a true picture of the profit earned during a particular period. The preparation of financial statement will help us to know the profit of during that period. So in that we prepare trading for a trading concern. We prepare trading account, profit and loss account, and balance sheet. In the trading account, the items usually come to our opening stock, purchases. On the debit side, all the direct expenses, maybe wages. These wages comes under the and all direct expenses come under trading account debit side, and in the credit side they come with sales or sales reducing with sales return and closing stock. Then we'll get a gross profit or gross loss. Gross profits come under debit side, and then we'll transfer this gross profits to our profit and loss account. Profit and loss accounts prepare gives us the indirect expenses. All indirect expenses come under this profit and loss account under debit side. The expenses could be management expenses, selling and distribution expenses, finance expenses, or abnormal losses. And on the credit side comes under the abnormal income apart from gross profit. It comes under abnormal income or non-trading incomes, maybe the bank charges and abnormal gains. These are, and we get a figure called net profit, which is transferred to our balance sheet, and will under the capital it will be we'll be adding this profit to our capital or reducing it if it is a loss.
So basically, from trading account we are getting the gross profit, and from P&L account we are getting the net profit. And the net profit is a final figure which will be appearing on the balance sheet, and it will be added to capital if it's a profit, and it will be reduced from capital if it's a loss.
And sometimes it happens if we have a manufacturing concern. Then we have to prepare account called manufacturing account, where all the direct and indirect expenses of manufacturing concern will come under that account, and the cost they'll have a credit balance which will be a cost of production which we will be transferring into our trading account. So the manufacturing account is prepared before a trading account. In case of manufacturing concern, where we'll find out the cost of production basically, and we'll transfer it to our trading account, and then we'll in the normal course we'll take the profit as gross profit or gross loss, and we'll be transferring it to the P&L account.
Yes, so basically under partnership also, the crux of chapter 7, 8 and 9 are more or less similar. Under chapter 7 we are preparing the financial statements, and in non-corporate entities chapter 9 also we are doing the same thing. Besides partnership we have a similar feature, we can say a similar feature, but the crucial aspects of partnership is also covered here, because in partnership we have the partner relations among the partners, and partnership is in the partnership chapter we have 3 or 4 types of peculiar problems: when there is admission of partner, when there is death of partner, when there is retirement of partner, and when there is change in constitution of partner. Even partnership, even if there is no admission, no retirement, no death, but there may be a change in constitution of partnership firm, means they may change the profit sharing ratio, or they may make some other adjustment for goodwill and all that thing. So that has to be considered in mind while solving the particular problem in partnership. Partnership is a very important topic, because generally from this particular chapter, 10 marks, 12 marks, or 15 marks question may be asked. So the definition of partnership we are skipping. I think there is no need for this. And there are 2 ways of preparing capital accounts: fixed capital method and fluctuating capital method. Under fixed capital method, all the adjustments are being done in current account of the partner, and only the initial introduction of partnership capital, or the withdrawals of capital, which are major in nature, they will be considered in capital account. Otherwise, all the adjustment of profit or loss, division or salary, drawings, they will be covering under current account. So 2 accounts are being maintained in the fixed capital method. Under fluctuating capital method, only 1 account is being maintained, and that is capital account. And all the adjustment since beginning till the end, all the adjustment, whether introduction of capital, whether drawings, salary, or whatever it is there, any expenditure which is being charged to the partner. So whatever adjustments are being there, they are being covered in the fluctuating capital in 1 account only, which is being maintained. So methods of valuation of goodwill is also simple. We have simple average method, weighted average method, and super profit method, capitalization and annuity method. So I think there is no problem in doing this. By solving the interest on drawings, we have to see this thing that certain times in the question it is given that the partner is drawing a certain amount, fixed certain amount in the beginning of every month, or in the middle of every month, or at the end of every month. For this particular purpose, how will you calculate the interest? This is multiplication factor is given 6.5 by 12 if it is the beginning of every month. For calculation of interest, then you have to see the total amount, and then you can see 6.5 divided by 12 plus the multiplied by the rate of interest. For drawings, if at the beginning of each quarter, then the multiplication factor is 7.5 divided by 12, and if it's in the middle of month, for each month it is 6 by 12. If it's the middle of each quarter, then it is 6 by 12. And if it's at the end of each month, then it is 5.5. Otherwise, it is 4.5. Yeah, in admission of partner, the new partner is being admitted and the change in profit sharing ratio is definitely there. So we have to calculate the sacrificing ratio of the existing partners. Moreover, we have to see the impact on the goodwill and whatever adjustment we are making in goodwill through, they will be made through partners' capital accounts only. No goodwill is to be raised or written off. We are calculating the sacrificing ratio of the partner, and the value of the goodwill is to be ascertained, and from that value of goodwill, we will calculate the amount of goodwill which is to be allocated to the existing partners in their sacrificing ratio, and the new partner which is being admitted is to be debited to that amount, and the existing partners will be credited to that particular amount. Suppose the goodwill is being valued at 1 lakh, and the incoming partner is getting 1/10 share. So it means 10,000 is to be debited to this new partner, and the earlier existing partners, if they are sacrificing the ratio of 1:2 to give the benefit of 1/10 to the new partner, then the existing partners will be credited in the ratio of 1:3 of rupees 10,000. So reverse is the case with the retirement of our partner.
And in both the cases, we usually revalue the assets and liability. All the revaluation, profit or loss after revaluing will be transferred to their capital accounts. The reserve is also transferred to their capital accounts in admission or retirement.
To the existing partners only, not the new partner in case of admission, and not the retiring, including the retiring partner in case of retirement of partner, because the retiring partner is also existing at the time of making the adjustment for the revaluation profit or loss. And on retirement of partner, on any undistributed profit or reserve standing in the balance sheet at the time of his retirement is to be credited to this particular.
He will also be eligible for that.
Yeah. In death, all assets and liabilities are revalued and result in profit or loss. It is similar to retirement as such, but the only thing is the application of Section 37. You have to see if you are not paying the amount due to dead partner at the time of his death only, and you are taking too much time, then Section 37 of the partnership and gives the partners a benefit that they can take either the interest at the rate of 6%, or they can take the amount of profits earned through that particular portion which is pending to be paid to them, and the business has earned something out of that. So subsequent, the dead partner is having the right to share subsequent profits from that from the amount which is being due to him.
Till the day the amount is
executors are not being settled. Till the time the executors are not being settled. In JLP, we have three methods. Either the JLP premium is treated expense, then it is written off P&L at the time of retirement, because we have already considered it as an expense. So whenever we are getting it, then it's a revenue for us, it's an income for us, and we will be dividing it in our profit sharing ratio. In method 2, when we are treating it as an asset to the value of surrender value, and balance premium is transferred to because in this case, for each and every date, you are being given the surrender value. So any amount beyond that surrender value is basically your income. And whatever amount is surrender value, that is to be considered as an asset in the balance sheet. Surrender value means value realized from the policy if it is surrendered now to the insurance company. If we are returning back the policy to the insurance company, what value we are getting. And at the time of retirement, when surrender value is received, nothing is transferred to the partners. At the time of retirement, nothing is transferred to the partners. Difference between the surrender value and the maturity proceeds will only be transferred to the partners. That too in their profit sharing ratio. The difference, because surrender value we have already considered earlier. So only the difference between the surrender value and the maturity proceeds will be now transferred to the partners in their profit sharing ratio. And this is the third method where JLP is stated as an asset and reserve is stated to the extent of surrender value. So it's basically a mixture of both the methods 1 and 2. JLP reserve is stated for the entire premium paid by the debiting company to the P&L account, and the amount of JLP premium less increase in surrender value if it is there. is transferred from the JLP reserve to the JLP account, because earlier we had created a reserve, now we are reversing it. And at the time of maturity, the full maturity amount, whatever amount we are getting, is transferred to partners in profit sharing ratio. In method 2, what we were doing is, whatever amount we are getting from the insurance company, less surrender value which we have already considered in our books, that amount is only to be considered for the distribution of the amount among the partners in profit sharing ratio. But under method 3, whatever total amount we are getting, because we have not considered any surrender value, so whatever amount at the time of maturity we are getting, that is to be transferred to the partners in their profit sharing ratio. So NPO is very simple. I think
it's a legal account. You are already aware that we prepare 3 accounts: receipt and payment, income and expenditure, and balance sheet. Receipt and payment is all the receipts, and payment is
similar
like
to cash
account.
Yes. Cash account, you say.
And income and expenditure is similar to profit and loss. All the incomes and expenses come, even if the income accrued, all the pertaining to that particular period comes under income and expenditure account. And balance sheet, you are already aware, summarizing everything, and all the profits come from income and expenditure account, that is the surplus here, and deficit, or either deficit, the surplus will be added to the amount, or either the deficit would be subtracted. So here, it's a summary of cash flow. The receipt and payment account, income and expenditure account is profit and loss account. NPO is registered under Section 8 of the Companies Act, as we are required to prepare income and expenditure account and balance sheet as per Schedule 3.
But in the study material, we are solving all the questions without considering Schedule 3. We are assuming that all the NPOs given in the questions are not registered under the Companies Act. If they are registered, then they have to follow Schedule 3. So that we are not covering in our study material.
And donations, entrance, admission fees, subscription, life membership fees are all the sources of income for non-NPO. These sources are either taken to the income and expenditure account or in the balance sheet, based on the nature of the receipt.
Whether we have to capitalize it or we have to consider it.
There could be chances where the donations are very small, so we can use it with the revenue nature also. Coming to the capital account, company accounts.
In company accounts, basically you are having issue of shares, reissue of shares, and forfeiture of shares. And there is no as such in issue of shares we are having. In issue of shares we are having the issue of shares can be at par, at premium. Issue of shares cannot be at discount. So I think the questions are very simple, which are given in the study material for issue of shares. The only complication arises when there is a forfeiture, because in forfeiture, whatever amount you have already credited to capital account, that has to be reversed, and whatever amounts you have already received, that has to be reversed in the form of share forfeited account. So basically, that adjustment is you have to consider it very thoroughly, and those entries you have to see very carefully from the study material. Securities premium, this is basically whatever amount you are getting as premium. If you are issuing the shares at premium, then what can be the uses of this? You can see from here. And share capital, authorized share capital, nominal capital, issued share capital. Issued means what you have issued. Actually, authorized is basically we have got sanctioned from the while registering we have to give, while registering the company we have to get the authorized we have sanctioned share capital under and through MCA. So that particular authorized share capital is there, and issued share capital means what we have actually issued to the public. Subscribed, maybe issued share capital may not be subscribed by the public. The public may subscribe for lesser amount, but if the minimum subscription we are getting, we can go for the issue. And called up share capital means if the share is of 10 rupees and we are asking for rupees 5 at this particular point of time, so called up amount is only rupees 5. And paid up may be less than called up. Maybe there may be some calls in area. And reserve share capital is basically we can certain amount of share capital which we can call up only in the case of binding up of company. That is basically reserve share capital. So in issue of shares, we have simple entries. While issue of shares is there, we have simple entries like we are issuing shares at part. So bank account to share capital, whatever amount we are right now getting, we can say we are dividing the rupees 10 into 2 installments. Suppose that application we are getting 5 rupees and that allotment we are getting 5 rupees. So we can simply say bank account debited to share application 5 rupees per share, number of shares multiply, we will multiply with the number of shares, and then share application to share capital. At the time of becoming due of the allotment money, we will pass the entry share allotment account debited to share capital and then bank account to share allotment. And again, if there are certain calls also, so at the time of making the calls due, we can make the entry share call account debited to share capital, and whatever amount we will be getting, we will be passing to the entry bank account debited to share capital. Again, at the bank account debited to share allotment, at the time of forfeiture. Now, what will happen at the time of forfeiture? At the time of forfeiture, all the amounts that we have received, they will be reversed and they will be credited through share forfeiture account, and the share capital account will be debited. Share capital account will be debited, and if the shares were issued at par, then the difference amount of, like, if the nominal value is 10 and we are issuing the shares at rupees 12, so bank account debited to application allotment money, application amount will be same 5, but while crediting the amount to the capital account, we will pass the entry share application to share capital to securities payment by rupees 2. So that will be the main crux, and at the time of forfeiture also, again it will matter whether the premium amount has been received to you or whether the premium amount has not been received to you. If the premium amount has been received to you, then again it will be reversed. And forfeiture actually means taking away, forfeiture means you are reversing the, forfeiture means you are reversing the amount, you are taking the shares back, and shares cannot be issued at discount. Shares cannot be issued at discount, but debentures can be issued at discount. There is no as such limitation with the debentures. So I think we can wind up now. Yeah, debentures, there are 6 possible combinations of combination. Debentures can be issued at par and redeemable at par or discount. Debentures issued at discount or redeemable at par or discount. Debentures issued at premium, but the whatever expenses are there, difference is there. Maybe debentures issued at discount, maybe 90 rupees you are issuing, and redeemable at rupees, suppose 100 or maybe 110. So the whatever the 20 rupees difference is there, that you have to book in your books right now only, as because that is a debenture issue or expense. Expense you have to book right now. So there you can see if there are any queries here. How to remember all the adjustment in partnership chapter? You have not to remember the adjustment, but by solving the question, whatever adjustments are there, you can see whether there is change in partnership profit sharing ratio, whether there is any revaluation of assets and liabilities at the time of admission retirement, whether there is any goodwill adjustments to be made. So that has to be considered from the particular problem itself. You are not required to remember anything. By solving, you will see what adjustments are there and you can account for it. By the separate policy of the contributing partner is also remains matured, but only the center value is paid up in case of retirement or death of partner. The separate life policy, there is a difference between separate life policy and joint life policy. Joint life policy is taken by the firm on behalf jointly on behalf of all the partners, and surrender value is basically to be considered at the time of death or retirement of a particular partner in the case of joint life policy. So,
we are through with all the queries.
If anything left behind that, you can also ask at our email ID. You can.
How to manage time? We are unable to answer all the questions. See, how to manage time in the exam, we have already told you, practice all the questions of the study material, even the easier question also you have to practice every question. Solve the mock test paper, and as soon as the mock test paper will be appearing in this our website, please download it, take a printout, and sit for 3 hours on a continuous basis and try to solve that paper within the time limit also. Give yourself at least 10 to 15 minutes before that 3 hours to revise each and every question thoroughly before completing the paper. So manage time for every chapter, for every section. You manage time. You write, okay, this much time is to be given allotted for this question. Then only you solve the paper, and practice each and every question of the study material will only help you to achieve good marks.
Again, read the question paper thoroughly and attempt those questions first in which you are most confident. If you are very sure of that you will be attempting this particular question, you will be able to attempt, then only you start attempting it, because first impression is also very important, because while evaluating the answer sheet, whatever is occurring as a first answer, that will definitely give the impression to the evaluator that what kind of performance you are going to do. And read the adjustment given in the question very carefully. Read all the important information, all the figures, amounts very carefully, and then only start your attempt.
Give all working notes, which should be the main part of your question. To substitute your question.
So the important thing is how to assimilate all the information in the question and to start solve the answer only then, and how to give the answer. That is also important. The way you will be writing the answer, you will present your answer in what manner. That is also important. If it's a theory question, then how to write it. If it's a practical problem, then how to start solving it. How to give the working notes. How to give the answer in the proper precise format. Even if it's it's a simple table you found you are preparing, but you have to remember like what way you are all the items you have to give on page side, what items you are required to give, totaling and all the linings. So these things are important to be while even if they are small things, they hardly matter. But while attempting the question paper, while writing the answer to the examination hall, they will definitely matter, and you will be given the marks according to that only, because each and every small thing carries marks. And if you have still any further query, which you can ask us as accounting, you can note down we are holding the PPT for some time. You can note the email ID. Any of the queries you can ask, and we will be trying to resolve it within the minimum time frame. So I hope the session was quite helpful for you, and you might have gained benefit out of this session. And so many students have asked queries, so it means that they are actually preparing for the examination, and they have geared up towards the preparation. So all the best, and we hope that you will definitely succeed with flying colors. Happy Holi, and play safe. Yeah.
Okay. Bye.